Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Good morning. Happy Friday, 14th of October, 2022. Nice rally yesterday. One day, it does not make a trend. 39% of the volume was ETF driven. That's almost a record high of 40. So it's not like a lot of people out there putting a stake in the ground on certain names. A lot of it was ETFs. Hedge funds on the Goldman Sachs Prime desk. Net sellers, 2-to-1 shorts to long. That doesn't necessarily mean anything. We're up nicely on the futures this morning. Could that have been the peak in CPI? Yeah, it certainly could have been. But I mean, what we all have to ask ourselves is, what's the decline going to look like? A couple of days ago, I saw a big multifamily REIT corporation talk about 5% rent hikes already secured for 2023. So that's kind of the worry. You're going to have a lot of these things that are just going to kind of keep on creeping up in some segments of CPI. So I'd be wary of expensive tech here. It's just given what happened yesterday, given what the terminal Fed funds rate looks like, almost 5% going into 23. Expensive tech, I think this will be opportunistic to lighten up still. I don't think it's too late. These lifts we're going to see here, that's kind of my thought. I think there'll be time again. These things are much more discounted to get back in, but that's it on that. I mean, the rally here, definitely positioning, definitely sentiment. There's too many bears in the bear den. It's just too crowded. Everybody's all bared up. So this thing has to go up, I think, near term. I don't know. I mean, it might, like that last week's rally lasted 2 days. Maybe this one also lasts 2 days, and Monday it'll be a reckoning. Who knows? Keep an eye on Japan. The yen can't get out of its own way. And this isn't my work, but for people that are much smarter than me with global economics, talk about if interest rates get to near 4% in Japan, that's going to be a big issue. And they do own a lot of treasuries, so they might have to lighten up on some of those to help alleviate their situation if that becomes an issue. Keep that in mind. Howard Hughes Corp, HHC, one that's not often mentioned, fantastic company, one of the best real estate companies on the planet, in my opinion. They do planned communities, both on the urban. They've got a property on one of the piers, I think, in New York. They've got several properties. They got the suburban retirement stuff with the whole pickleball thing and the yada yada yada. But they've got really nice things that anybody would want to live there. Anyway. And been very smart. They've been selling real estate the past year as well. So just kind of they've been sort of realizing the go-go days that are gone now, but we're here for sure, 6-12 months ago. Anyway, Bill Ackman, Pershing Square, big holder. He is tendering for over 6 million shares here. So Bill's looking to own more. Maybe it's worth taking a look at. We own it for a long time. It used to spin off of General Growth Properties, if you remember that one. And it's just a real high quality name. So it's not, the tape is rough for real estate. If you got rates keeping going up in your face, it may not work near term. But, Bill knows this name probably better than anybody. And if he's looking to add here, it's worth jotting down in your notes. Air Test, AEHR. It's one I mentioned a couple days ago. Burn-in and test for silicon carbide. On the tape yesterday, announcing a new customer. There's a number of new customers that are testing their equipment for purchase. This trend probably continues. These guys have got what seems to be the best technology for the best price out there in that space. It's a small cap, so it's going to be volatile, but had a 10% move to the upside yesterday. Weak sellers always come in on this thing. I think it's a day trading stock too, so you get people that just puke it out. So it'll be down 7% on some days. those are the days you pick up some. You don't pick it up on up 5, up 8% days. So yeah, keep an eye on that one if you are interested. It is a small cap, so buyer beware as far as that goes. We own it. We own a decent amount of it. We're going to own more of it. But we'll buy it on, like I said, those 7% pullback days. Have an awesome Friday. Have a great weekend. We'll talk to you Monday.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.